Live from Bloomberg's World Headquarters in New York, I'm Shonali Bassick.
And I'm Tim Stenivek. Welcome to Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance.
And coming up, as Bitcoin falls more than 12% over the past week, Anthony Pompliano is joining us to discuss the big price swings and the latest in venture capital in the crypto industry.
Plus, we look at the Bitcoin halving and what it might mean for potential crypto consolidation. We're going to talk to Delta Blockchain Fund's Kavita Gupta.
And as we head closer to the big U.S. election, we're going to discuss the millions being spent by crypto lobbyists to tip elections in favor of pro-crypto candidates.
First, though, let's get a check on a snapshot of what's going on in the crypto market today. A sea of red. Bitcoin right now down about 5%, extending its retreat. It's actually down about 13% from last week's record. We're seeing selling across crypto assets right now. Ether also lower today. Now, it hasn't hit a record going all the way back to 2021. Still down, though, nearly 20% just since last week's high. I do want to take a look at various pressure points that are affecting crypto right now. First, MicroStrategy down yet another day. This after yesterday's 16% decline. Look at this, down 26% in the last 2 days. The company's executive chairman and co-founder, Michael Saylor, sold about $5 million in shares over the last week. The company also made its second multi-million-dollar purchase of Bitcoin in just over a week. Just over 9,000 Bitcoin for $623 million. That's according to an SEC filing that we got earlier today. Now, because of that, it now owns more than 1% of all the Bitcoin that will ever be issued, Shonali.
Now, Tim, I also want to bring us over to another firm very much impacted by the volatility in crypto prices. That is Grayscale, because the Bitcoin Trust, which we know has faced outflows to the tune of about $12 billion since the conversion into a spot Bitcoin ETF in early January, you can just see how much those inflows had moderated, the outflows rather, and how much they have exacerbated since then. Of course, more recently, we have had Bitcoin prices come off of new record highs, and you see that just on Monday, it had its worst day in terms of outflows for more than $640 million worth alone, Tim. So we'll watch where that goes. Of course, it matters to Grayscale, but that decline in Bitcoin prices also matters to other Bitcoin issuers out there, ETF issuers rather.
And it does also show why they're launching that other one soon. Elsewhere, we are seeing a lot of calls for Bitcoin, including this one from Standard Chartered Bank. One analyst predicting that it's going to hit $150,000 by the end of the year, and then get as high as $250,000 by 2025. That would be a more than 250% increase just from today's price. Now, you'll remember last week on our program, Raleigh Purduhova from 7RCC also boosted her year-end call for Bitcoin. Check it out.
Last time we were here, our target was 100,000. We're currently revising that to 200 by the end of the year, if not higher indeed.
And there's another developing story on our radar. Bitmex said it's investigating unusual trading activity, including possible misconduct that led to a flash crash on Bitcoin on its crypto exchange just yesterday. The price of Bitcoin against Tether's USDT stablecoin fell to as low as $8,900, while trading above $66,000 on rival platforms. Bloomberg's Mike Regan is here to explain. Mike, how do you see issues forming with how Bitcoin is traded across different exchanges, and how does that differ from what you might see, for example, in traditional equities?
Well, in traditional equities, especially in the U.S., you have this consolidated tape where no matter what exchange or dark pool stock is traded on, it all eventually feeds back to one single data source. Whereas in crypto, you have sort of a bunch of different exchanges and various data feeds. And in this case, with Bitmex, I think what is interesting is this is an exchange we don't talk a lot about in the U.S. It's not available in the U.S., but it is a very well-established, well-known exchange overseas. It's famous for introducing the perpetual futures for Bitcoin in 2016. Again, they're not available for the most part in the U.S., but very popular overseas and very sort of influential on the price. So that's what they're known for, and they do offer spot trading. And in this case, what happened is they just had a very aggressive deluge of sell orders yesterday, sort of early evening New York time. And unlike many exchanges, they don't employ their own internal market makers to sort of maintain a stable price. They say they do that they think it's a more fair market that way. But what it meant in this case was that, according to a tweet from Bitmex, is that there was such an onslaught of sell orders that the external independent market makers and other traders just weren't able to react quickly enough to stop that price from plunging.
So it's interesting that we see this on one exchange, but not necessarily on other exchanges, Mike. And I'm wondering if, as we start to see institutional adoption happen with crypto, happen with Bitcoin, do you think we'll start to see some of those precautionary measures put in place on these individual exchanges that we see when it comes to like traditional exchanges like the New York Stock Exchange or the NASDAQ?
Yeah, so if this were a stock, it wouldn't have been able to sell off so aggressively because of circuit breakers that go off if the stock gets too volatile. Crypto, for the most part, doesn't have that. There's been talk for years about introducing them, but there's really no consensus to have them everywhere. So I think it is possibly something that could come into the conversation and the discussion. If a price suddenly drops on one exchange by a real aggressive amount, you just halt trading on that exchange and let everyone catch their breath and sort of catch up with the price action. It's a great question that I think it comes up every now and then, especially when an event like this happens. So
like
I think
when Bitcoin goes on sale like that.
Yeah, right. And to be sure, it's not clear exactly how long it stayed or how many orders were able to be filled at that price. Bitmex said they think there was only one trader who was able to get a price under 12,000, but not exactly clear. You'd have to go through sort of line by line on the order book to see what happened.
Lucky trader. Bloomberg's Mike Regan, thank you so much. We're going to bring in Pomp Investments founder now, Anthony Pompliano, where we're going to talk about something much simpler than the intricacies of market structure here, because you do have Bitcoin prices back below $65,000. What's happening under the surface?
Yeah, for context, this is a pullback for ants compared to what Bitcoin historically has been through, right? In previous bull markets, Bitcoin has experienced 30% drawdowns 5 or more times. So on the way up, in 2017, we went from $1,000 to $20,000. There was multiple 30% drawdowns. Right now, we're about 13 to 15% drawdown. So in historical context, this is actually a very small drawdown in a bull market. Now, the other thing that's happening, I think, is if you extend out and you look over the last 10 years, in the last 5 years, Bitcoin's up 1,500%. The S&P is up not even double. If you go back 10 years, Bitcoin is compounded. The compound annual growth rate of Bitcoin is 60%. The S&P is 11%. And so if you compare those things, if you want volatility on the upside, you're going to need some volatility on the downside to get there. And so I think that just keeping the historical context is important because this is a very, very small drawdown compared to what we've seen in the past.
But does it mean that traders really ought to buckle up here and expect potentially more volatility, further drawdowns ahead?
I mean, there is some irony in the fact that Wall Street came in, and when the ETFs were approved, immediately the price crashed, right? Kind of like welcome to Bitcoin. And then we break all-time highs. And 3 of the last 4 times that we had broken all-time highs, Bitcoin's price had doubled in 18 days or less. And then all of a sudden we get a 15% drawdown. And so I think one of the lessons of Bitcoin over the last, call it 3-4 years is no one knows what the future is going to be. And we've even violated some of those historical rules that people held kind of as these like holy rules, right? We had never seen Bitcoin go below a previous all-time high. We had never seen Bitcoin hit an all-time high before the halving. Both of those rules got broken. And so I think we're in uncharted territory here. And people have to understand this is like an 80 vol asset that, yes, it's been the best performing asset, but it is very, very volatile all the way up.
You've been in this space for quite a while, relatively speaking, because it's a relatively young space. You're known for a couple things, being early to the space, but also making quite a few private investments when it comes to crypto, when it comes to blockchain technology. Given that we have emerged from the crypto winter, how would you characterize venture capital interest right now around crypto versus where we were about a year ago before this bull market?
So venture capital interest for sure has increased. We've seen a lot more capital flow into it. But what I think is interesting about crypto is there's private markets and public markets, but the public markets are not like in traditional technology, right? In traditional technology, we have the best companies staying private for longer, and so the returns available to you in the public market are not nearly as attractive as, let's say, an early stage investment. In crypto, that line is much more blurred. And what I mean by that is you can go and you can invest in a seed round, a Series A, maybe even a Series B of a private, kind of normal equity investment. But if you're buying some of these tokens in the public liquid market, they still are early stage investments, right? And so you have liquidity, which obviously changes kind of the way that you think about risk and reward. But two is there's still a lot of asymmetry. And if you go back, there's maybe the last cycle, Solana was kind of the famous example. Anybody in the world who had an internet connection could have gone and bought Solana for $1 on the liquid exchanges. It went up to $250. Those have historically been returns that have been reserved only for private market investors. And so again, it doesn't mean that they're all going to work. They're all early stage, type things, and so there's a lot of risk. But I do think that there's more of a blending. And so when you see interest come back in the public market, it's also coming back in the private market.
Hey, one of the promises of crypto has been this idea of democratization. This idea that instead of it being controlled by a small number of very wealthy people, the masses, for lack of a better term, have access to it. I was pretty struck earlier today when I saw that Michael Saylor's MicroStrategy now holds 1% of all Bitcoin that's ever going to be created. Does that concern you?
Not really. I mean, Cameron and Tyler Winklevoss, they've owned 1% for a decade or so, give or take. And so there's a number of different organizations or people who have, 1%, 0.5%. What I think is really interesting is as Bitcoin's price has been moving up, there's a report that came out that 1,500 wallets per day were reaching the $1 million threshold. And so,
right, and we don't know if those are individuals. We don't know who those
correct.
are.
But let's just say, some portion of them are individuals. And so Bitcoin is essentially minting millionaires on the way up. Now, how do you think about what's like the ideal distribution, right? Does everyone in the world get one Bitcoin? Well, there's not enough for that, right? How do you kind of view, okay, if we could perfectly plan distribution? Well, the beauty is this is a free market, right? It is kind of the epitome of what economics and a lot of economic theory has always pontificated about. And so what we're seeing is people are buying Bitcoin at the price they kind of deserve, right? If they've done the work and they understand it, they start to buy it. Their access to capital, right? It's not like Michael Saylor has bought all the Bitcoin with his own money. Actually, I would argue that Michael Saylor doesn't control all that Bitcoin. What happens is he's got debt investors, he's got equity investors, he's got himself, et cetera. And so there's a lot of people who kind of have their hand in the cookie jar of that Bitcoin.
We're talking so much about Bitcoin, and we should say that you guys are hosting a Bitcoin Investor Day in just a couple days. But it begs the question, what about everything else but Bitcoin? You see so much interest that has just flown back into the markets. You can call it exuberance, you could call it a bubble if for some. What about the meme coins?
So I think right now the market story is Bitcoin and meme coins. And frankly, they're both right. Right, that's kind of the crazy part about this market is the Bitcoin investors have been right. We hit a new all-time high. Everything they've been saying is now getting repeated as talking points by some of the most respected people in finance. But on the other end of this, human nature is gambling, right? We have government-sanctioned lotteries, et cetera. And so if I say to someone, hey, there's somebody over there who put $500 in a thing, went to sleep, woke up, and it's now worth $25,000, there's a lot of people in America who say, well, I'm interested in that. But this just isn't an American story. It's a global story. And so we're seeing these meme coins work. Now, again, it's almost like a video game for adults, right? I don't like playing video games that much. I play every once in a while, but I'm not confused as to say that's real life. And I think these financial assets are very similar. The odds that these things actually have real value or are kind of tethered to anything in the real world are very low. But there are people making real money doing this, and I would argue it's no different than what we see in the stock market many times. People are gambling on, zero-day options. Well, if I buy a meme coin or I do a zero-day option, which one has better odds? That's pretty hard to compete.
Anthony, we're going to have to leave it there. Always good to see you. Thanks so much for joining us on Bloomberg Crypto. Pomp Investments founder, Anthony Pompliano. Well, coming up, Kavita Gupta of the Delta Blockchain Fund joins us to talk about these price moves and, of course, the upcoming halving.
And tens of millions of dollars are being pumped into U.S. elections by crypto lobbyists. We're going to discuss the potential impact on the races.
And to access all of the latest data and news on crypto, check out CRYP Go on the Bloomberg terminal. This is Bloomberg.
I think post-halving, there will be some miners whose profitability may be challenged or who may be looking for an exit as their revenues will drop because of the price, the amount of Bitcoin being awarded will drop. And so I think what we'll find is there'll be further consolidation.
Some comments there from crypto mining giant Marathon Digital CEO Fred Thiel last week, speaking about the halving effect. For more, let's bring in Kavita Gupta, founder and managing partner of Delta Blockchain Fund. Kavita, good to have you on the program. I want to get to the halving in just a second, but first I want to talk about the price moves that we've seen. As we mentioned, Bitcoin down around 12-13% from last week's highs. How are you watching the price moves in such a short time?
It was very much expected. I mean, if you look at even like last week when I was on Bloomberg, I was saying the same thing, that there is going to be a sell pressure. What is going to be interesting and different about this time, which I think Pomp, who was here before me, was also sort of insinuating at it, is this is the first time when the ETF market also have a very big buy pressure. So between the sell and the buy, we are finding a very new chart for Bitcoin prices. Said that, do I expect Bitcoin prices after the Bitcoin halving over the summer to go around late 50s or around mid 50s? Absolutely. But I don't see much more movement beyond that.
But that's still a while away, Kavita. I mean, how do you think about, we thought only about the way up until this point when it came to Bitcoin ETFs and how much more buying pressure. But the selling pressure, could that add more volatility to the Bitcoin asset class than meets the eye?
So selling pressure on the Bitcoin asset class, actually, even in 60s, is not bad for the people who really believed in it during the Bitcoin winter at in late 20s and early 33, 32K. And for them, this is a good exit price. But said that, based on the new technologies which are coming on Bitcoin and a lot of movement which is happening on the buy side, I think you will still see that there is going to be a new threshold on which in 50s it's going to find its balance for quite some time before we go and touch another new ATH for Bitcoin somewhere Q3, Q4 of this year.
What about when it comes to the halving, the upcoming halving? How do you anticipate that's going to affect the price of Bitcoin? We do have other halvings to go back to that we can look at what happened. So how should we look at history here, and what do you think is going to happen?
Again, as with respect to the history, we have always seen around halving the prices going up, then the sell pressure comes down, going down, and then eventually pick it up because people start getting into the market. I expect the same. But at the same time, I do expect that, as I mentioned before, the forces with respect to sell and buy very different. I do expect people who have been holding it from a long time, especially out of Asia, a lot of individual small miners, to have the sell at the high prices. But I still see with the ETF demands, people keep on buying it. And so the buy pressure is going to make sure that it doesn't go down to 20s or 30s again.
Kavita, I think
And we are
I think it's worth talking about what people are actually buying here for a moment, because people think about Bitcoin, they think about it almost as a store of value at this point. But to the point that you started to get at, that there are things that are happening outside of this ecosystem that are use cases. To you, which are the most promising?
I mean, if you look at Ether, right, and we always only talk about Bitcoin, or like you just mentioned about meme coin right before me. I mean, the main technology which started with Ethereum and then moved to a lot of different chains, whether it's layer 2s like Polygon, or we have non-EVM like Solana. It's all about technology which has put them into multi-billion-dollar FTVs in the market. Now we are seeing in last year and a half, a lot of similar technologies getting built on Bitcoin, whether it's staking, whether it's actually creating NFTs and memes on Bitcoin, whether it's actually creating a decentralized finance with having a cross bridge to Ethereum, which is EVM compatibility, and to be able to have a multi-billion or $1 trillion liquidity out of Ethereum. So we're going to start seeing that a lot of Bitcoin holders, which has always seen Bitcoin as just a pure storage value, actually start having a lot of use cases of it and having 15 to 25% yield, which people on Ethereum staking and restaking has been getting those benefits for last 4-5 years.
Kavita Gupta, founder and general partner of Delta Blockchain Fund. We thank you so much for your time and can't wait to have you back soon as we watch this price action play out through the course of the year. Now, coming up, how crypto lobbyists are using their war chest to try and sway the elections this year. But will it work? We'll answer that next. This is Bloomberg.
Well, the crypto lobby stepping up efforts to boost its influence in Congress, planning to pump tens of millions of dollars into elections this year. Bloomberg's Allison Versbrill reported on this and joins us now. Allison, good to have you with us. If we were talking about this 2 years ago, I think we'd be talking about Sam Bankman-Fried making the rounds on Capitol Hill. Certainly a lot has changed in the last 2 years, this time ahead of the 2024 election. What can you tell us about the role of crypto and the role of crypto money on Capitol Hill this year?
So I think you made an interesting point about Sam Bankman-Fried. You're right that 2 years ago we were talking all about him, what he was doing. I think what makes this iteration different is, we have a lot of crypto executives getting into the action. In particular, Brian Armstrong from Coinbase has been really vocal. And there's kind of one key big pro-crypto super PAC called Fairshake that's already been diving into elections. It started with, $80 million of funding, which is pretty huge, and it already pumped, $10 million of that into kind of an attack ad campaign against Rep. Katie Porter, who was running for an open Senate seat in California. They've claimed credit for knocking her out of that primary race. I think some people will say, well, she had about half of the votes as the top two candidates who move forward to the general election in November. But I think the message is clear. They have a lot of money to spend. For any politicians who are in close races, they see that, and they may either be concerned about that or trying to court that. So we'll see how that progresses.
What level does this matter at? It's interesting, Ali, because you're going to an event tomorrow that involves Coinbase, where you will see congressmen of all sorts there, and some have support very strongly outside of the crypto industry for their stance here on technology, on financial services. Does it matter at the presidential level? Does it matter in the Senate? Does it matter in the House? Where does the rubber hit the road?
I think it matters on all levels. Right now, there are a number of crypto bills that Congress is considering. They haven't really gone anywhere. They've gone through some committee votes, some of them, but, bills to regulate stable coins, bills for, telling you which agency, either the Securities and Exchange Commission or the Commodity Futures Trading Commission is your regulator. Bills on illicit finance that the crypto industry is really concerned about. So, making an impact on these House and Senate races is a big deal if they can get people into these seats who might be more sympathetic. It's also a chance for them to sort of reward those politicians who maybe stuck with them through the aftermath of FTX's collapse and kind of the turmoil of 2022. And then the presidential election, I will say that the industry hasn't given a sense one way or the other if it's going to jump into that one. But I think there's some sentiment that maybe former President Donald Trump, if he was to be elected, he'd be potentially a little bit more sympathetic. He's kind of come around a little bit on the messaging for Bitcoin.
Right. Ali, we have to leave it there. That is Bloomberg's Allison Versbrill. Don't miss her coverage on the Bloomberg Terminal and Bloomberg.com on just what's happening in politics and crypto. And that's all for Bloomberg Crypto today. But join us next week on Thursday, March 28th, for full coverage of Sam Bankman-Fried's prosecution. His prosecutors are saying that he should get as much as 50 years behind bars for his role in the collapse of FTX. But stick with us. We have Coinbase CEO Brian Armstrong in 10 minutes from now. And before that, Carson Block of Muddy Waters. This is Bloomberg.